Yeah, I mean, so we're seeing quite a lot of depreciation pressure in a lot of ASEAN currencies, including ringgit. And actually, before yesterday's meeting, one of the key risks to a lot of market consensus to a hold view is the support from BNM for its currency. But I think what distinguishes BNM from other central banks, say, for example, BI and BSP here, is really their view on inflation, their assessment of inflation. Inflation is not an immediate concern for BNM, and say, for example, BI, even inflation is low now, they're more concerned about importing inflation in the future, trying to be preemptive, whereas for Malaysia, I think it's still in a relatively benign inflation environment. I think that's the key distinction.
You've got some thoughts on Vietnam and the inflation rate, but broadly, the China +1 strategy benefiting Malaysia, Vietnam, Indonesia, Philippines, does that mean potentially more upside in terms of FDI inflows, and how constructive is that for headline growth?
Yeah, so despite the near-term cyclical challenges we're seeing on the trade front, but if we take it from an FDI angle, which reflects, long-term confidence from investors, ASEAN overall remains in quite a good position. And as you pointed out rightfully, Vietnam remains in a very good position in terms of the supply chain relocations, especially among the consumer electronic space. So what we see now is that trend is still continuing despite a very challenging trade environment right now. But once the trade cycle turns, I think Vietnam, along with others, because of that expanded capacity, then they were in a much stronger position to rebound in their manufacturing sector.
Resiliency. Mandy has a question.
Hi, Mandy.
Hi there, Yun. What are you observing in how Southeast Asian economies are utilising their fiscal resources to try to alleviate the cost of living?
That's right. I think for some ASEAN countries, they're still giving out some of the fiscal package to support the economy. But I think some economies also, for example, Singapore here also made it very clear that it's not going to be broad-based support here. We're very much, on a targeted basis because they're very much aware to avoid stoking further inflationary pressure. And I think really coming out of the COVID days, for 3 years, where a lot of ASEAN countries have given very generous subsidies for a lot of them. It's also time to pursue a fiscal consolidation path. It's just some countries do it in a more gradual way. Some countries do it in a more aggressive way.
How much, though, are the cost of living pressures coming down on their own, though, Yun? Given that energy prices have come off the boil and supply chains post-COVID are now starting to ease up?
Yeah, I think for a lot of the ASEAN countries, inflation is indeed on a consistently downward trend, probably with the exception of the Philippines here with high food inflation. But what we have seen recently, especially in the recent 1 to 2 months, is that there's still a lot of upside risk to inflation. If we think about the volatility in the global commodity market, if we think about food inflation, generally speaking, and especially for rice price, recently we saw this rice price quite rallying quite a lot back to where it were in 2008. So I think the trend is not derailed, but the central banks are very much wary of the upside risk to inflation to slow that disinflationary process.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.